going for so long. Back to my first description about them having two worlds is, if you remember, as the US allowed China to ascend in the WTO in 2001 under false pretenses, as we now know, with the expectation of them opening their economy, becoming more Western, becoming more liberal, becoming more democratic, and they've actually gone the other way. And so basically, if you look back to then, what we did is we exported, 4.5 million jobs from the US Rust Belt went to China. That we started exporting our jobs to get cheaper t-shirts and cheaper tennis shoes and cheaper electronics. That's basically what we did. And what China did is they amassed a pile of US money, $4.5 trillion. Right? So they were the world's factory floor, and they got $4.5 trillion, and then things reversed, right? What happens when you bring 400 million Chinese out of poverty into the middle class? What are the first thing these people do? Well, they travel. Well, when they travel, what are they going to spend? They're not going to spend RMB, they spend dollars. So China is short energy, food, basic materials, and now travel. They have to spend their reserves on these things to let them happen. So this world that they live in, where they want to have a closed system, but they're kind of opening the cage and letting the birds fly a little bit, and they want the birds to come back home, and they only let the birds spend a certain amount of money when they're flying around, that travel services deficit, just net travel in China, is almost $350 billion a year now. So what I'm learning is their entire MO is they have to get access to dollars. And you know, I'm here in DC with you, and we'll fast forward this conversation real quick, because now that they don't have a positive current account, or let's say a net amount of dollars coming in, they actually have dollars leaving net.
Right.
What they have to do is find other sources for dollars, because their labor arbitrage is gone. They're no longer the world's factory floor for all intents and purposes. Many of the areas in Southeast Asia and even Mexico are now up to Chinese income
Picking up
levels.
the mantle, basically.
Right,
Yeah.
right. So that labor arbitrage is gone, and so now they need to find somewhere else. So as we all know, they steal about $200 to $500 billion a year of U.S. intellectual property, and they earn a return on that. So that's one way they make money. The other way is they've cajoled and coerced people like MSCI and the Bloomberg Aggregate Bond Index. These are big pools of capital that the globe invests in, and they've convinced and coerced these people into making the Chinese representation in these indices bigger.
So these are American index funds, right?
Both American and European, right?
Okay.
So with the FTSE and the
Yeah.
Barclays Global Ag and all of those, these are indices that global pension funds, global institutional investors track. If you allocate your capital and say, I want 40% in U.S. stocks, I want 20% in emerging markets, I want 10% in global bond indexes, right? If you're going to follow the endowment model, and a lot of endowments and pensions follow that model.
Yes.
If you change the model, if you tweak how much China is in the EM index, then those funds have to invest the money there. And so China's figured out through, I think, the back doors, how to get dollars to flow into China. And I was mentioning to you, one of the meetings I had here on the Hill yesterday was the Chinese securities regulators. So that basically the Chinese equivalent of the head of the Securities and Exchange Commission, the CSRC in China, was here in Washington, D.C., meeting with congressmen, telling congressmen that Chinese companies don't really need audits and there's nothing to worry about there.
So wait, hold the presses here. Chinese companies don't need audits, and this has actually been the case forever, right?
So our securities markets were opened up to what we deem to be emerging markets. In emerging markets, we created various levels of compliance that we require for you to list your company here. So these are two questions you're asking. One is securities in the United States. So if you have an ADR, an American Depository receipt, and you are PetroChina, you don't have to submit yourself to a covered audit. It's shocking, but you don't.
But what that means for the layperson is you can just tell people what your financial situation is, and they have to believe you. There's no check and balance at all.
It's actually worse than that.
Okay.
So there are 3 levels of ADRs, and depending on which level ADR you classify or qualify for, You don't. Some just need to send a 20-page glossy presentation with no financials in it. So we have, as a country, have allowed this to happen because the idea was back during various, I'm not going to point fingers, at various administrations, they thought we need an on-ramp for global emerging markets to access U.S. capital markets and to grow. I understand ideologically the idea, the idea behind it. However, we have strict securities compliance in the U.S. for reasons. We've had huge frauds in the past. We've had Enron, WorldCom, the list goes on and on and on and on in companies that actually had audits that were defrauding U.S. shareholders. So we've set high standards, and Dodd-Frank really brought that to, the Dodd-Frank Act brought that to a level that if you and I are going to raise money in the U.S. and run a U.S. company, we're going to have to adhere to some really high standards.
Yes.
And that's the way it should be.
Yes.
Chinese companies today get a pass. They don't have to do that. Well, why is that important? Well, because it's tens of billions of dollars on the equity side, and it's $1 trillion worth of bonds. $1 trillion today. Now, we're talking about this issue with foreign indices and China's participation there. I'm only talking about, these are US listed companies.
Right.
So then when we go to the foreign side, this is hundreds of billions of dollars. And we're funneling hundreds of billions of dollars to companies in China and Hong Kong that don't have, first of all, there's no rule of law over there, as you know.
Yes.
Imagine as a Westerner what you think you're going to get when something files bankruptcy over there. It rhymes with hero. You're not going to get anything, right? When things go bad.
Well, yeah.
So we are enforcing even the U.S. federal retirement thrift plan. The money of our U.S. military is being forcibly invested in Chinese companies that have no audits. And in some of them that build concentration camps in Xinjiang, in Hikvision that builds all the surveillance equipment for China. It's insane that U.S. military retirement money is helping China with their mission.
From what we understand, a lot of the loans, especially internally, will ultimately default or are going to be non-performing.
Sure. So the IMF has even publicly said they think the number of non-performing loans exceeds 7% of assets. China claims it's 1%. We think it's more like 20, 25. And to put it in perspective, in the Asian financial crisis, so 98, 2001, 2002, about 35% of Chinese loans went bad, and they had to restructure their banking system. And Wang Qishan was actually the chief economist at the time restructuring the Chinese banks, 2001, 2, 3. So if a third of the Chinese loans go bad, we're talking about $15, $16 trillion worth of loans going bad. Just think about this for a second. They only have $2 trillion of equity in their system. And so, to put it in perspective, in the US financial crisis, our entire banking sector lost about $800 billion. And we recapitalized it.
Right.
Okay? I'm telling you that China's going to lose at least $3 trillion, if not $5 trillion in their collapse.